Morning, Steve Free in Chicago with the morning grain comments. We got markets higher overnight, but they are off the session highs. We have seen that markets were trading at these recent high levels due to liquidation of short positions and margin calls. We still have some positive news, I think, in the marketplace with still the Black Sea exports stopped because of the war, and the fact that maybe 12 to 15 million tons of Russian wheat is not being shipped out. There is talk that the Russians are trying to ship food and grain out of the Baltics, and there is also talk that 2 of the Russian banks were taken off sanctions so that they could trade food and grain. We also did hear that the one Russian exporter may have declared bankruptcy. We're also watching pretty closely South American weather. Argentina, southern Brazil is still getting needed rains that at least stabilize the crops there. As far as Paraguay and central Brazil, it remains dry. And the central Brazil dryness raises concern about their second corn crop. So there is talk that the soybean crop in South America could be down 20 million tons, and the corn crop could be down 10 million tons. And that all that would suggest some of that demand might shift to the U.S., and that would tighten our carryouts and continue to offer support to the marketplaces. There was yesterday an announcement of 198,000 tons of U.S. beans to China in the old crop and 68 new crop. There was 198,000 tons being sold to the unknown, 66 to the new crop. We have been hearing this week that China's bought 10 to 12 Brazil, April, May, June, bean cargoes 3 to 4 Brazil, May, 8 to 10 Argentina, May bean cargoes, 3 to 4 U.S., April, May P&W, and 3 to 4 U.S. October P&W beans. So again, kind of hope that some of that new business turns to the U.S., especially on the old crop. It's interesting to note that India sun oil and February imports were down 54%. And there's also talk that in Europe, some of the grocery market stores are limiting the amount of sun oil customers can buy. Brazil corn domestic prices at a new high at $8.25. And yesterday we saw the Matif corn actually trade lower. And I think it's trying to follow what happened late in the U.S. markets. There's talk that the Europeans may allow for GMO feed grain imports, and they also might allow farmers there to plant on set-aside. There continues to be a lot of concern about Ukraine planting their 2022 crops due to lack of transports, logistical problems with bridges and railways being blown apart, also availability of seed, fertilizer, and fuel, also spare parts and labor. The Dalian markets, soybean and palm and soybean oil and corn were higher, while soybean meal was lower. We've got the funds along 180,000 beans, almost 90,000 corn, and 424,000 wheat. And again, we'll be watching the Fed because they seem to be becoming more dovish. As always, these are my thoughts and not those of ADM or ADM Investor Services.